Hi everyone, welcome back to Financial Mindset. After the conversation with Samir, Kabir couldn't stop thinking about investing and stock market, so both of them decided to meet during the next weekend and discuss further. So when they both met, Kabir asked Samir to explain what is the stock market, to which Samir replied, "Yes, why not? I will explain what is the stock market with a very simple example." Samir continued with the example, so assume you want to buy vegetables. For buying them, what will you do? You will go to a marketplace where you can get them, right? Similarly, when you want to buy shares of a company, you will have to go to a stock market. In this modern world, for buying shares in a company, you don't need to physically go to stock market. Everything is digitalized. For investing in stock market, we just need to have a demat account linked to our bank account. And the best thing is everything is done online from our mobile phone or laptop. Kabir asked, "But why will any company dilute its ownership?" To which Samir replied, "They do so because they want funds to expand the business, and by issuing shares, they do not need to pay any interest or principal amount back, as by issuing shares, they are making us also the owners in the proportion in which we buy the shares. On the other hand, if they borrow money from the banks, they will have to pay back the interest and the principal amount." Kabir asked, "So what is the process by which any company enters the market?" To which Samir replies, "Companies enter the market through the process known as initial public offering or IPO. Samir continues with an example. Assume you run a business and now you want to expand your business, for which you require funds. Now you have two options. Either you borrow funds from bank or you go to public and issue shares to them for the funds you require. And you choose the second way, which is to issue shares to the public, which is done through the process of IPO in the primary market. Primary market is basically where new shares are issued. When the shares are finally issued in the primary market by the process of IPO, the company gets listed on the stock exchange." Kabir asked, "Now what is the stock exchange?" Samir replies, "In simple words, stock market is only called stock exchange or secondary market. Once the company passes through the process of IPO, it gets listed on the exchange and all further trades are executed on the stock exchange." In India, we basically have two major stock exchanges, National Stock Exchange NSE and Bombay Stock Exchange BSE. Samir continued, "Next time when we meet, we will discuss in detail about IPO and stock exchanges." Kabir asked, "So through what all ways can we earn by investing in stocks?" To which Samir replied, "Majorly there are two ways through which we can earn by investing in stock. The first is through capital appreciation. Suppose you bought a share of a company named Z Limited for 100 rupees. After some time, its price increased to 150 rupees. The hike of rupees 50 is the profit you earned." Kabir asked, "And how does this hike in price take place?" To which Samir replied, "This is basically due to demand and supply. As much as the demand rises, the price of the stock will increase." Samir continued, "Another way through which we earn is through dividends. Suppose the company earns profit from the business it does and it decides to share part of its profit with the shareholders. This distributed profit is called dividend. Although giving dividends is not necessary, but still mostly companies distribute dividends to its shareholders." So finally Kabir asked, "So how can I start?" To which Samir replied, "I will tell you in short. We will discuss about this in detail on some other day." So basically you need to have a bank account which will be linked to your demat account. You can create your demat account through any of the trading app or stockbroker. You require few documents like Aadhaar card, PAN card, etc. to open demat account in India. And once everything is set up, you can start investing. All the transaction etc. in stock market are regulated by Securities and Exchange Board of India, SEBI. Kabir finally says, "I think it is enough for today. We will discuss further when we meet again." To which Samir said, "Yes, just keep few things in mind whenever you start. Never feel overexcited. Always do your own research, ask questions, be consistent and invest sensibly." So this was all about this video. For more such videos, do like, subscribe and share. This video is only for educational purposes. Any information provided in this video is not to be assumed as an investment advice. Characters in this video are completely fictional. Please consult a professional before investing.